Hello and welcome to today's Crypto Insider. In today's episode, we look at the key news stories for last week, which is the week starting the 3rd of September and ending today, the 9th of September. I'm your host, Zep van Doort, and I will talk you through the key stories. So the big one, Bitcoin price remains under pressure after Goldman Sachs squashes fake news. Bitcoin price remains locked in a downtrend Friday, even as Goldman Sachs squashed rumours that it was scrapping plans for a cryptocurrency trading desk. The Bitcoin price was down 2.2% at 6,377 US dollars on Bitfinex. The leading digital currency traded as high as £6,549 $50 overnight before sliding all the way back down to 6,322.8. Far gone are the days of $20,000 bitcoins. But the interesting piece was last week the Bitcoin and all related cryptocurrencies crashed quite significantly. I was sort of tracking it at around sort of 7,000, 7,300, somewhere in that region. And then I checked again, and it gone down massively in the space of a few minutes, somewhere towards the region of mid 6,000s to low 6,000s. And this was mainly put down to the fact that Goldman Sachs was reportedly scrapping plans for a crypto trading desk. Well, firstly, I sort of never believed that the language of even what was reported was very subtle. So I just personally never believed that those two were linked. Sometimes I think we have a way of looking back in the crypto space and saying this is why A, B or C happened. But thankfully my sort of intuition sort of came true, and Goldman Sachs Chief Financial Officer Martin Chavez said that a recent report about the company dropping its plans to offer cryptocurrency trading is fake news. The original report, which was released by Business Insider, indicated that the Wall Street megabank was shelving a proposed cryptocurrency trading desk amid regulatory uncertainty, citing private sources. The report said Goldman Sachs was diverting its efforts to creating a custody solution to keep institutional capital safe. I was in New York yesterday and I was co-chairing our risk committee, and I saw the news article Chavez said at the TechCrunch Disrupt Summit on Thursday. It wasn't like we announced anything or that anything had changed for us. I never thought I'd hear myself actually use this term, but I really have to describe that as fake news. So essentially, my gut feeling was right. The two weren't linked, and in fact, the report turned out to be completely fake. So the good news for me is that Goldman Sachs are still interested in the cryptocurrency space. It'll be interesting to see what happens later on this year, early next year, and it's good to know that Goldman Sachs hasn't shelved their plans to look at cryptocurrency later on in the year. The second story, which I thought was interesting, was this one. Alibaba IBM top global blockchain patent ranking, says new research. So major financial and technological enterprises from China and the US are leading the global drive to develop blockchain applications, according to a new report that ranks entities by patents filed. The research, released Friday by IPR Daily, a media outlet specializing in intellectual property, shows that Chinese internet giant Alibaba tops the list with a total of 90 patent applications focused on blockchain-related technologies. The CoinDesk article goes on to explain that IBM is in second place, which falls just one short of that total with 89 filings, while MasterCard occupies third place with 80 filings. Bank of America made it to fourth place with 53 blockchain patent applications. So why does this stand out for me? Well, firstly, for me, there are the tech giants getting involved in this, which we sort of knew, but it's still always good. Alibaba, IBM. And secondly, there are institutional players, particularly finance players, looking at blockchain, and for me that also indicates a sort of wider crypto space. That's Bank of America and MasterCard. For me, as a Stellar Lumens holder, I am always particularly interested in what IBM does with their link to Stellar. So again, it's very good to see that they are actively on the front foot in this space and are actively dealing with this. I think that can only be good for stellar holders really. So this is a very interesting piece for me, and something that I keep a very close eye on. A few other interesting things was that Alibaba recently launched a payments corridor based on a distributed network, which will settle financial transactions for residents living in Hong Kong and the Philippines, which is very, very interesting. And the article goes on to explain that Tencent, the Chinese giant, also piloted an application via its WeChat messaging service that used blockchain to speed up the process of reimbursing corporate employees' expenses. I find all of these developments fascinating, and it sort of shows the way, if we look probably more from a slightly Western point of view, that Tencent, if we look at sort of what are some of our applications in the West, it's like WhatsApp, they will all start looking at integrating blockchain, and probably for me that the feeling would be in the near future that might also include cryptocurrencies. So again, for me, this article about Alibaba and IBM topping global blockchain patent rankings shows shows that there's a definite longer term interest in this space, and that it's not a fad. The third article that caught my eye this week is by Cointelegraph, and saying Vitalik Buterin, the main man behind Ethereum, saying the crypto blockchain space won't see 1,000 times growth again. So there is no chance that the cryptocurrency and blockchain space will see 1,000 times growth. Again, Ethereum co-founder Vitalik Buterin stated in an interview with Bloomberg on September the 8th. At an Ethereum and blockchain conference in Hong Kong, Buterin told Bloomberg that the rapid growth of crypto and blockchain industry is now reaching a ceiling and is moving from just people being interested to the stage of real applications and real economic activity. Buterin explained that the period of explosive growth in the sphere is likely coming to an end, because the level of superficial awareness about the industry has significantly grown and is likely to plateau. If you talk to the average educated person at this point, they probably have heard of blockchain at least once. There isn't an opportunity for yet another 1,000 times growth in anything in the space anymore. Again, why this is interesting is I find that there are hardly any experts in the cryptocurrency space. I think everyone tries to portray themselves as a expert, but in reality experts are very far and few between, because it's a completely new technology. Cryptocurrencies are a completely new asset class, and so there aren't many experts. Now, that doesn't mean that there aren't any, and Vitalik Buterin is obviously one of the main experts in this space. And so when he talks, I think it's very wise to listen. So if he speaks, my ears prick up. So when he says there is an opportunity for yet another 1,000 times growth, I'll probably take him very serious. That said, the growth in cryptocurrencies and blockchain will beat your ISA or your 401k any day. So even though you probably won't see 1,000 times growth, my personal feeling is that the growth is probably much better than you would get elsewhere. Again, it's very interesting to keep an eye on what Vitalik is saying, and heed his lessons really. Now then, finally, the last article that I wanted to discuss is one from the Crypto News Review, who are talking about what's behind the massive 87% drop in Ethereum. If you are an Ethereum stockholder, or crypto holder, then you might have noticed that the price has gone down significantly. Last time I checked, it was under $200, considering 6 months ago it was trading somewhere in the region of $1,500. Yes, we can say it's a big drop. It's a big shock for me. Every time I see Ethereum drop, I think it can't go any lower, and every time it sees me lower. So The article starts with the past 24 hours has seen Ethereum plummet to $186, down 87% from its all-time high of 1,385 in January of this year. The last time ETH was this low was July 2017. What's behind the falls? It goes on to talk about the main reasons. They think it drops, but obviously one of them is the forced selling of ETH by ICOs. So ICOs raise a majority of their funds in Ethereum, and for the most part their funds stay in crypto. This has proved to be a big mistake. If an ICO raised 15 million in January, it would have little over 2 million today. And I think what they're sort of saying is that actually if you're an ICO, you have to sell your Ethereum to fund your project. The second point that they're making is that ICOs are going out of vogue. Obviously in 2017 ICOs were all the rage. You do see them a lot less these days. It then goes on that that there are a lot of short positions on BitMEX, and it states while the FUD is strong, traders are making money on the continued decline of ETH by short trading on BitMEX. The more it falls, the more they make, and all indicators are that current bets are big. It then also points to the failure of dApps, to say that Ethereum launched in 2015 with the promise that its technology heralded a new kind of software application, completely decentralized, without any possibility of downtime, censorship or third-party interference. dApps held a great promise, and ICOs like Augur raised millions. However, the number of daily users are pitiful. Last month, CoinDesk reported that Augur has only had 66 users in 24 hours, and overall dApp usage is in the thousands. Ethereum as a software platform has been a failure. It's expensive, slow, and inflexible, it states. And then it goes on to say what the future holds. I'm probably sort of less interested in that, but I think, in all honesty, it's probably a sort of pretty good assessment, I think. And again, I think we often try to read too much and try to predict too much of why things happened. But I think that there's a few sort of forces here that they do spell out very accurately. The forced selling of ETH by ICOs being not as popular as they were, a lot of investors shorting Ethereum, and actually the failure of the dApps. So yes, I think that they've got some sort of good points, and they end the article to say only the strong will survive. So amongst the community, there's a positive sentiment that the current downturn will at worst shake out bad projects and ensure only the best survive. Crypto isn't going away anytime soon, and what will come out of the other side of the ongoing bear market will be far stronger, ready to transform the world. Yeah, again, I think they've got a point, and particularly if you sort of read this article in conjunction with Vitalik Buterin's statement that the space probably won't see 1,000 times growth again. I think it might be the reality of the market. It'll be very interesting to see what happens with Ethereum, considering as I consider myself as a long-term hodler. I'll be very interested to see how this pans out. But it's been a rough ride. So these were the sort of key stories. This was Crypto Insider. Please leave a comment or let me know if we've missed any stories. Be keen to hear from you. Thank you.